Let's get down to the New York Stock Exchange and check in with Jim Cramer. Jim, earnings keep rolling out, and it's a lot to keep all of us busy going through it. What do you think, let's just say, travelers going through? They had better than expected results on the top and the bottom line. Looks like they earned a profit in all three of their major businesses. What are you thinking? That stock right now up by 2.6%.
You know, you mentioned something earlier. This is the sweet spot. You want to be. I think Chubb's going to be even better. A lot of property and casualty, very good. A lot of the life companies struggling, not the property and cash. It's these guys' sweet spot. I think that a lot of people don't understand the way Travelers works, but when you have good pricing in property and casualty, this thing goes higher. It's a very, very good company. I do like Chubb better, though, but this was one that I think is off the radar screen that should be on the radar screen.
Okay. Let's walk through Morgan Stanley. Some strong results that they reported, but that stock turned around. It was down by more than 3% last I looked.
Well, okay, look, I mean, they beat the consensus. There is a worry about that they took look, they had a provision, $234 million versus versus $98 million, what people thought. But, they have a giant book, and I think that's not unusual. They did bring in $110 billion in new debt in assets, which I thought was very, very good. One of the top people who brought in assets. I think that James Gorman is going to tell a pretty good story. But then again, this is a market that wants to nitpick. It is a higher multiple than Goldman Sachs. It does have a better yield than Goldman Sachs. But people are going to sell it, maybe sell it down. And then in a few days, they recognize that Gorman's got a superior franchise and that wealth management is the place to be. So let them sell it down. The stock was up to 89 the other day. I think it's fine. I wish it were better. My charitable trust owns it. Nothing's perfect. It's not bad. Not a bad quarter. That's the best way to put it.
We heard from Scott Kirby earlier with United, and I thought what was really interesting was that he said right after SVB, the bank, Silicon Valley Bank going down, there was a drop, an immediate and clear drop in business travel that was being booked. It's rebounded since, but he just said that it's a shaky economy. It's hard to know which way things are going to go, and maybe I think the description he used was on a knife's edge.
Well, I think that's a little harsh because I think that given the fact that there's so few defaults, and you look at Bank of America, it's just the best year in 53 years when it comes to defaults. But Brian Moynihan was talking about how April was a little bit weaker for the consumer, corporate maybe a little bit consumer, a little bit weak for the corporate in the last 2 weeks of March. So it's a mixed picture. Again, I mean, we have these mixed pictures that people want to draw conclusions that are almighty for, and I think that's a mistake. I think things are fine. I think if the Fed raises twice, then they'll push us over the knife's edge. If it raises once, I think people will be fine.
You're right. We all want answers. We want clarity, and we want the answers
now.
Right?
I spent yesterday chasing down a couple of stories, and you can chase all day, and then you just realize, well, look, maybe the franchise the franchise is not in stake. This is not an existential moment for most companies. And like Morgan Stanley, we're going to look back and say, you know what, Gorman has some really good enterprise. It's the right thing to own. We'll look back at Goldman and say, you know what, they didn't miss by that much. And but Morgan and Goldman are not the classic net interest margin, net interest income banks like you have with Wells and J.P. Morgan. And those are the big winners. Wells and J.P. Morgan were the best so far.
It's a calming voice. Thank you, Jim.
Thank you.